important level, of course, isn't the absolute low, but it would be somewhere against the average of lows, and that's around 1220. And 1220, 1225 is a psychological area, so we got to keep our eyes peeled there. So I've given some good, strong outlay points to focus in for this week. If you're bearish in market, then you don't want to see this thing close Friday above 1312. If you're bearish this market, you want to see a continuation down, and you want to see this thing break 1270, and you know, just fight the urge to take a profit, because if it breaks 1270, it's got a little bit more. Typically, you'll see some more negative momentum to the downside on a breaks, especially when we get a break to those points. All right. So that concludes our analysis on gold. I want to move into the other fear factor market. Gold's a fear factor. People were buying gold because they were afraid of the Fed, inflation, safe investments, the government, just whatever you want to come up with. It was the fear factor trade. So what else is a fear factor trade? Treasuries, because they're safe. They're a risk of buying a bond, but your return, if you hold to maturity, you'll get your money back, right? So another fear market, I call it, is the bond market. And it's interesting because I wanted to point out to you some levels of why we look at what we call relative strength, or why we look at spread charts. Relative strength is comparing not Wells Wilder's indicator, the RSI, Relative Strength Index. I'm talking about comparative relative strength analysis, as discussed and covered in not only our TTU trading course, which is something that we've been using for decades. And as a commodity trader, the first thing you did was learn about spread trades. You know, we had this saying over at the Chicago Board of Trade when I first got into business.